2022 eventually ended up being one of the most turbulent years on record for investors, with Black Swan after Black Swan roiling markets. Will this uncertainty carry on into 2023? This is what we asked Areka Capital CEO Denny Wong Teck Meng, as well as what sectors he thinks will perform well and what sectors to stay away from. Last time we met, we thought that 2021 was already a tough year for the markets. It turns out that 2022 was equally just as difficult. So now, with another new year in front of us, what do you think 2023 is going to look like?
I would think that 2022 was a really, really bad year. Everything comes together at one time. So it's a perfect storm. The thing is actually market price in all this bad news.
I see.
And then moving forward, right, or rather in this year, we think that everything has been pricing in so low, so we cannot get, I think, worse than before.
Hopefully,
right? Hopefully. So look at the external factor, we have actually a better inflation figure, right? 9.1% in June is already, to me, is really peak. So we have 7.7, I think you're coming down on the trend. And then look at the trade war, it looks like some light at the end of the tunnel. So you can see some, China and US start to talk about it again. Talk about China lockdown, I think they allowed some activities including marathon, including Disneyland to reopen, so they relax a bit in Hangzhou and also Shanghai. So these are a few factors that really give us some hint that it will be a better year in this year, in 2023. Typically on equity side, I'm pretty positive on equity, that it will rebound from the low. Last year was a really bad year. But on the other hand, also I'm very bullish on fixed income. Judging from the fixed income rate, the yield was peaked last year and inflation peaked last year. Likely that, of course, the Fed may slow down the interest rate this year, right? So with this one, and then all the rate already priced in, it will only look forward to either the rate will be stagnant for a while before it cuts, right? So when this kind of scenario is very positive for bonds. But having said that, be careful about credit. So we still like bonds, but strong credit bonds.
But there's this fear, right, that investors could go extreme. It's either they become so spooked over the past 2 years that they go so risk adverse, or they've decided, okay, I think it's going to be great, and they put all their money in. Is there a fear that that could happen to investors? Because it's been a very strange 2 years.
Oh, definitely. There are people really go on extreme side, right? So we have met many investors this kind of thing. So for those who are doing very, very extreme, again, asset allocation should works for them. You must have some kind of assets that's actually contracting for the feature itself, especially the risk reward ratio, right? You must have something that provide you steady AD when the unexpected things happen. But you also have something that to make sure your portfolio can grow to a certain extent that hit your objective. So it's always the case. So similarly to those who are ultra conservative, I think nowadays that our living standard, our inflation is pretty high. By staying passive, very ultra conservative, you will not make your future works very well, right? Especially your retirement plan. You have to really think twice whether this kind of rate of return can sustain your long-term plan.
Inflation is the main concern for many, even those on the ultra-conservative side as well. Yeah. How do you invest to protect yourself from the bigger impacts of inflation?
In a portfolio, you must have some growth asset. That's to make sure that you can achieve certain return that hedge your inflation pressure. But on the other hand, you must have something that even out the risk. So overall, you must talk to the professional how to balance, if you do know, how to balance your portfolio to achieve some decent return, yet not so risky. If you are the kind of person that moderate in terms of risk reward. But having said, if you are young and you still have an active income, I don't mind you take a bit of an aggressive way, because the time to retire is actually quite substantial, or rather quite long, per se. So with that kind of a long duration, you can take a bit risk, and then to achieve the higher return, so that to maintain eventually hedge against the inflation and maintain your standard living.
What are the sectors you think we should keep an eye on for 2023?
Back to our domestic side, I think one uncertainty has been removed, and then our valuation is quite low, and the next thing to do for the government is to actually to make sure that our economy actually recovered and the border reopened, and then people has job, and then make sure that cost of living is actually maintained, that sustainable, that we can actually live with it. These are the good factor. When this good factor coming in, I think it will be good for certain sectors. For instance, for the first 6 months, I'm quite positive on financial banks, for example. So these are actually a proxy to economy. When actually economy better, the bank will grow because of the proxy to the economy, right? The loan growth, the deposit growth,
Yes.
and the business come back, right? Second thing is when the border reopen, when people are more positive about the economy, the spending will be there. Then when hopefully that China will totally reopen by maybe 2-3 months down the road, then it will also encourage tourism. So when more inbound tourism, and they also within ourselves actually spend more money, the consumer sector will also benefit from here. Right? I will look beyond these two factors, which is actually maybe a shorter term factor. A long term factor, I like growth stock, right? Being the exporter industry or technology sector. This sector actually remain relevant in the next 3-5 years to come. Right? And this is very important to the tech sector. The last one, what I want to say is actually medium to long term, which is, I think, something to do with our ethical investment. That means ESG and climate. We cannot run away from here.
Yes.
Malaysia, by 2030, we have to reduce our carbon emission by 45%
That's the
intensity
promise, yes.
to that. So how we can do that? I think the government will have to do a lot of things to do it, and this sector will benefit. Things like green energy. These are things like reduce carbon emission. These are sector will do well. So this one, I think the young generation will also like it. So this will be the main sector looking forward for long term. Yeah.
On the flip side, do you think there are any investors, any sectors that investors might give a pass?
I would think commodity will have a challenge
I see.
this year.
Okay.
Right? We hit a high of multiple high indeed for some of the commodity sectors, being the oil, even a CPO price, metals, for example. Actually, we hit quite high. Even gold was high at one point.
I remember,
right?
yes.
Yeah. So this thing will adjust itself when things normalize. So I would think that commodity that price in with the high price now adjust backward. You should avoid those sectors those players that depending on the price, the ASP.